Hello everyone, welcome back to my YouTube channel. In today's video, we are going to be building this accounting application that we are seeing here. This is a complete accounting system that you can adopt and implement in your organization if you don't have the finances or the resources to acquire or buy a licensed proper accounting software like QuickBooks or Sage 50. Right? In my previous videos, I have made a lot of tutorials on how to use both QuickBooks Online and QuickBooks Desktop, right? But if you cannot get your hands on that application because of the financial requirement, then you can actually fall back to something like this. Now, if you look at your screen right now, you are seeing a dashboard, right? This is a summary of everything that has occurred in the business, and this actually reflects all the transactions that have passed through the system. Then you can see also we have the cash flow. Now we have the cash flow, even though it is not a comprehensive cash flow like you can see in the other financial statement, but it is something, and it actually is a summary. It has the it has all the elements of a cash flow statement, just that it is a little bit concise, or it is concise to actually not get you confused in times of using the application. Then we also have the balance sheet, otherwise known as statement of financial position. Now this balance sheet, you can see this is everything here is automated, just as I stated here, automated from closing balances. You can see it. Balance sheet actually is a statement that shows the true position of your business at a particular point in time. Right, you can see that these are your position in each of the transactions: your cash and cash equivalent, your trade receivables, your other receivables, your inventory, your PPE net, that's the net PPE after depreciation. Then we have your total asset. Then after that we also have your liability section. Yeah, we have your liability section, under which we have the account payables, we have the accruals, we have the tax payable, we have the short-term borrowings, we have the long-term loans, all of this. Then when you look at it, it gives you your total liability. Then we also have the equity section, and the equity section is the capital invested in the business, right? We have the capital, we have the retained earnings from the POL statement. You can see everything here is automated, right? You can look, if you look at the formula, you can see that everything here is automated. There is no one single typing or figure that is typed manually. So if you post your transaction correctly, it will definitely populate in your account in each of these statements, and you will be seeing it done, and with ease you can generate your report anytime and anywhere. Now we have the drawings, we also have the current profits, and we have what? You have the equity, the total equity, and the total liability. So if you look at your total liability and your total asset is the same, right? You can see everything is in. That means the transaction posted from the inception of this account up to date, everything is accurate. Now we have the income statement. You can also see it very concise and simple to understand, from the revenue to cost of sales to gross profit to operating expenses to operating profit to other income and finance costs and profit before tax, income tax. Income tax is even automated, right? It's even automated. Then we have your what? We have the profit for the year. So everything here is automated. Then we also have the account payable summary, where you see all the vendors you are owing, everybody you are owing. You will see how much you owe them, how much you have paid back, how much you have paid, and the percentage of how much you have settled. So this is the credit activity. Then yes, your cash settlement, how much you have paid. Then this is your closing balance, what is remaining, and you have paid 71.4% of it. So the status of this account is still open, while this one that you are seeing here shows that you have settled there and nothing. Every other thing here, because it's zero, that's why you're saying settled, right? We also have your account receivable. Your account receivable shows the same thing: your credit activities, your cash settlement, your closing balances, and your settlement percentage. So you can see if it is complete, it will show 100% complete and the status will be settled. Otherwise, it will show you open, right? I'm going to show you how to build all of this. Just stick to the video and make sure you like and subscribe, right? So let's also look at the inventory. You can see the inventory section, everything is automated. At every point in time, you can just open your inventory to know what item is running low and which item need to be restocked and how many of each particular item has been sold, right? You can see the summary out of everything. I will show you how to build this step by step, and again, see your trial balance. Now, the trial balance, of course, we know that it is a statement that shows the arithmetic accuracy of all the postings in the financial, all the postings in the individual ledgers, right? Now, from your trial balance, you will know whether your other statements are going to balance. If your trial balance did not balance, if your trial balance did not balance, then your other statements will definitely not balance, right? So that is why it is very important that the first thing after you are prepared, after every posting, is to make sure that your trial balance correspond with everything you are posted in all those individual ledgers, right? So you can see here our trial balance is correct, is balanced, and that's why we have okay. And the net balance here, we are seeing 0. The check is okay, so everything is perfect, right? Now, this is where it gets interesting. We have the general journal summary. For those of us who are accountants and management accountant, you will also bear me witness that auditors, most of the times, what they ask you of is not actually those things I have mentioned earlier. What they usually ask is your general ledger summary. They want to know how these transactions are posted, because this ledger shows the movement of each transactions and how they relate to each of the accounts that generate those statements. So they also pay attention to this, and all of these are automated. No single one is typed. All of them are automated. I am still going to show you how to do that, right? I'm just giving you a review of what you're about to learn in this video, right? So if you look at here again, we have the automated journal, right? Now, I used to tell people that every accounting application has what is called journal. Now, the journal is basically like when you have run out of other options, or when you have run out of when you have a transaction that need a specific attention or need a specific kind of treatment, but because of the module of the applications you are using, you are not able to find out, or you are not able to see how to use those modules in treating that kind of transaction. Let's take, for instance, you have effect of foreign exchange transaction. Of course, if you're in Nigeria, if you are doing an international transaction, you know that when you receive money in dollar, after converting it, the invoice you issued initially in naira, when converted in dollar, right, the amount that is coming in dollar is going to be either lesser or higher. So in that situation, you need what is called journal to reconcile that account, because ordinarily you cannot say you issue an invoice of 200,000 naira, and when the money was paid and they were paying you $100 for that. So you need an account to reconcile it. You need a kind of journal to reconcile that difference, so that it will actually say that, okay, because this is an international transaction, we are not able to actually treat it as a naira value. So the difference after converting the dollar to naira, the difference is what we actually impute in our effect of foreign exchange transactions. If you don't know what effect of foreign exchange transaction, you can go look it up and learn more about it. As an accountant, is something you have to actually know, because it deals with companies that have international transactions or do international transactions. All right, so in that case, you need a journal to actually adjust that kind of transaction, or better still, your depreciation. There is no module separately made that says, okay, this module handles depreciation. We can have fixed asset registered in accounting applications, but we don't have a module that actually handles depreciation individually, or if we have, I have not come across it yet. But what I am saying is out of experience. If you have, we don't. If we have, I have not come across it yet. But journal is what you can use to adjust such transaction. Now we also have, this is automated, of course. As you can see, it's automated journal. That means you are not meant to type anything here. So everything you are seeing here will be populated automatically as we build this, because the building blocks, this is the result. These are what I'm showing you from when we started this video, are the result of what we're about to build, right? So but the building block or the engine house is what we are going to see right from here. Now from the manual journal, that is where we have the automated journal. So from the manual journal, this is where we enter our transaction. Like I said, every accounting module, every accounting software has a module. The module that handles receive payment, the module that handle payments, the module that handle expenses, the module that handle sales, the module that handle invoices, the module that handle refunds. So we have different kind of modules in accounting applications such as QuickBooks and Sage50. We have them. You see them. If you have gone through, if you don't know how to use QuickBooks or any of this application, or you want the application for yourself, you can actually drop a comment and I'll send you the details on how to get in your hands on the application. Actually, the videos are there on the platform for free, right? So all of these are modules that are handled by different kind of transactions. The receive module handle receive from customers. The payment module handle payment from customers, or payment received from customers, or payment made to vendors. We have the vendors module, we have the customers module, we have the sales module, we have the invoice module. All of these are modules that you can find in every accounting application. But at some point, not all of this application can handle all the complexities in accounting. So they make provisions for what is called journal entry. So that journal entry will enable you to track or record transaction the way it appeals to you, the way it reflects your thought, the way the transaction happens, actually the way the transaction and how you want it to be recorded. So that is why we always have the option for journal entry. In this case, what I title my own is manual journal entries, right? So you can see that used for adjustment and non-operational transactions. So that is what you can use this for. Example, you can see depreciation expenses, you can see accumulated depreciation because they are non-cash transactions. So the cash flow tag is this. I will show you how to do this, all of this. So this is where the building blocks start, right? So the building blocks number 2, we have the expense. Like I told us earlier on, I said accounting applications are built in a way that everything is simple. You don't need to overthink things. This is expenses. You know that it's expenses. And what you're doing here is to record expense. And you can see it clearly stated, operating expense, record non-inventory expense. That is why there are always clue on every accounting application. So I'm using that concept to build, I use that concept to build this application as you're seeing it. So record non-inventory expense here only. So you can see example, we have the utility and rent. We have this is paid, the vendor is the landlord. We have the staff cost, which is staff payroll, which is salary or whatever you can call it. We have the finance expenses, which is bank charges or whatever interest rates you can find there. So these are where you can record such transactions. Then we also have the payment. Now, payment module in this case is used to record payment you are making to your vendors. Payment you're making to your vendors. Every accounting application have modules like this, right? Every accounting application have modules like this, and that is why I have taken my time to build this in a way that reflects the standard. When you are seeing it, you know that this is what this is for. You don't need to overthink things, so you just record that, right? It means that if you're using this payment option, it means that you have not made the payment before the vendor issued an invoice to you, right? Issued an invoice to you. So you recorded it in your inventory, you recorded it in your purchases that you purchased this item but you have not paid for it. So now that you want to pay for it, this is actually the module you are going to use in making that payment. They also have the receive module. Now receive module is for customers, right? You can see how everything is flowing. Receive module is for customer. You make sales to a customer and the customer do not pay immediately. So what you're going to do is to pay the customer, or when the customer make payment, I mean when the customer pay you, so you use the receipt to record that payment, right? Record that payment because you issued an invoice to the customer. That means the customer have not paid for the transaction. Now we have the sales. Now this ordinarily is what we call invoice or sales register. Invoice or sales register. It's here is where you're going to enter the date of the transaction. You enter the invoice number, the customer name, customer code. Because this is automated, once you type the customer code, it will automatically bring out the customer. As you can see, there is formula there. It will automatically bring out the customer. Then when you type the item code, you select the item code, it will bring out the item name, right? Then the quantity of item, the unit price of the item, the unit price. Of course, this unit price is supposed to be automated, right? I will automate it when we are building it, because once I select this item, I don't need to type the unit price again. The unit price ordinarily should have pop up, right? Should have pop up without me typing it. So I can see that right here I did not input the formula to do that. So we're going to do it. We're going to do it together. So we have this that will be calculated automatically because it will multiply the unit price times the quantity. It will give you this. Now if the customer have paid, then here you will just select either he paid via cash or via transfer. So either one you can select here. Then we have the cost. Now automatically it will calculate the cost of sales for you, right? You calculate the cost of sales for you. Now this is not the beginning of this class. This is not the beginning of this application, because we are supposed to start from where? We are supposed to start from the foundation, right? I'm just giving you an overview from the result we are expecting down to how we started to this place. Now we can see that it has calculated the cost of sales or cost of revenue for this. Now you can see the gross profit. Already you can see that you're seeing the gross profit immediately, right? Then you can see that this transaction status says okay, and this is the description for that, so you can do that. Now we also have the purchases. Now it's also called purchase register, or you can call it purchase register or purchase order, whatever you want to call it. Here all your purchases, you can record it. If you record the date, the bill, the customer, the supplier, the item, the quantity purchased, the unit cost. Here under the purchase, the purchase cost cannot be automated. Why can purchase cost not be automated? Because prices may change, so there's no need of automating the prices here. So here you can leave it like that. I deliberately left this one like that. So we have the line total, that's multiplication of this and this, and we have payment method. If the customer paid immediately, you just record cash the same way we did in our sales, right? Sorry, if you paid immediately, you record, you say yes, you paid cash or via transfer or credit, posted, whatever description you're going to give it, and the due date for remittance and when the item will be supplied to you, right? Now we have we have the supplier. Now this is now a building block, right? This is where we have the supplier database, right? The supplier's master sheet. Now this is supplier's master sheet, right? The supplier master sheet is where you list of all your suppliers or the list of all your vendors with their details and your credit terms, whatever agreement you have with them. If you have any opening balances, you will go ahead and do that. We also have the customer master sheet where you also enter the details of your customers, right? So you can see it's basically the same thing. Then we have the inventory items, right? This is where you list all your inventory, their cost, the associated accounts, and everything that there is to enter here. So every other thing here is automated from the opening balances. As we proceed, you will see that. So the opening balances, we have the opening balances, of course. These are where you enter. If you're migrating from one accounting system to another, this is where it gets more interesting, because you enter all these opening balances to the individual accounts. Then you have to make sure that all the items you enter balances, because your trial balance is going to reflect that. So if the item here balance, then that means your account will also balance. So that is for the opening balances. Now we also have the chart of account. Now chart of account is the foundation of every accounting system. Without a chart of account, there is no accounting system. The chart of account is the list of all the accounts that are going to be used in the whole business transaction. Now, see the chart of account as a house with rooms inside. So the accounting system is the house, the chart of account is the rooms in the house, right? Ordinarily, without the rooms in the house, there is no structure, right? So accounting system is the house, or is the land, or is the space. Then the chart of account is the room, or are the rooms inside that house, right? So that is basically what a chart of account. Then we have this. This is just for validations. Instead of me typing this anytime I see them, so that's where you see I can select the payment terms here. Here I can select either credit or cash, either way. So that is why I made this list, right? So you can see validation list used for drop downs, as you can see. Now the next thing here is the startup or setup. Every accounting application, the foundation, before you start using any accounting application, you must first of all set it up in a way that suits your organization. Set it up in a way that reflects whatever you're going to be using it for. So this is a setup, right? You can see instruction, edit yellow cells only. So these are the space you can edit, right? So these are just what we have done. Now the next sheet we have here is just instruction. It's a guide for anyone that's going to be using this application, that okay, these are the items, these are the places you need to edit, these are the things you need to do in each of these places, which is what I have done so far. We started from the reports, right, where we saw the dashboard, we saw the manual journal entry, we saw the expense module, we saw the payment module, receive module, and we saw the sales module, purchase module, opening balances, master sheet, and now we are at the setup. Then we also have the guide, is what is showing us how these things relate and communicate with each other. So you can go ahead and read through. So it states automated accounting and inventory management system, integrated inventory sales, integrated inventory, sales, purchase, receivables, payables, ledger, and financial statements. So that is it. So in the next section, we are going to start building this application. If you have not subscribed at this point, then you are not doing yourself a favor, and you are also not doing me a favor, because I am here trying to give you a knowledge for free, something that if you're asked to pay, you pay heavily for it, but I'm giving it for you for free. All I ask of you is to subscribe, like, and share with someone that needs this knowledge. Thank you very much, and see you in the next session as we build this automated accounting system.